Hey everyone, welcome to Fast Pass University, where we make passing your insurance exam simple, clear, and stress free. So glad you're here. Whether you're studying for life and health, property and casualty, or personal lines, this channel is all about helping you understand the material, not just memorizing it. Here you will find state law lessons, exam walkthroughs, study strategies that actually make sense, all of that good stuff. But before you dive in, please make sure to check out our website at fastpassuniversity.co. That is .co. Where you can download study guides, workbooks, other resources to follow along with these videos. And if you want live help, tutoring, or studying alongside other students, join our FastPass community on School at school.com/FastPassUniversity. It's our private hub for live classes, instructor support, and a place to ask questions anytime. I'm so excited to help you start your insurance journey. Let's get you your Fast Pass. Hey everyone. All right, we are going to go over the Texas statutes, laws, and regulations that are pertinent to the life and health sections of your insurance exam. It says Section 2 here because Section 1 is in another video. If you have not watched Section 1, which is Texas statutes, laws, and regulations common to all lines, please go watch that before this video. It's going to go over that first half of the Texas statutes and regulations, which is common to all lines, whether you're taking property and casualty or life and health. Those are going to be the same across the board. So go check out that video first. And if you've already done that, then you're in the right spot. I also will put the link to that video right in the description for you to find it easily. So we are going to get into Section 2. This is the part that makes this pertinent to just the life and health part of the exam. So if you're taking your life and health exam in Texas, these are those state laws and regulations that are pertinent to this part of the exam. Covers about 10 questions. All right. So we spoke earlier a bit about fiduciary responsibility. It is the agent's responsibility of handling premiums. An agent acts in a fiduciary capacity when handling client premiums. This means that the money belongs to the insurer or the client, never the agent personally. Okay? So, insurer or client. They must maintain separate trust accounts. Okay? So, if somebody gives you, you go and write a life insurance policy and they give you that premium, that first month premium, things like that, you cannot go get lunch with that on your way home. You cannot use that to pay your office assistants, right? It has to be in a separate account. Yes, when you go submit that, you're going to get your commission back from your insurance company, but you got to wait until that money comes back to you into your business account, things like that. So, an agent needs to act in a fiduciary capacity. They have a fiduciary responsibility, and that means to handle the funds appropriately, right? Um, Same thing if you get a life insurance check and you're going to go pay that out to the family, that has to stay separate, okay? You must also remit premiums promptly to the insurer, okay? So you cannot commingle funds, and you must remit premium payments promptly. Their company that you work for is going to have some strict guidelines on that. After a couple days, they're going to start saying, where is that? You need to go deposit that. So when you do collect the premiums from your customers, you got to get that over to the insurance company promptly. Breach of fiduciary duty is a serious violation. Okay, these are going to be, right up there as some of the, unfair practices that you cannot do as an agent. Commission sharing. They love these questions. Agents may share commissions, but only with other licensed agents. Okay. So if somebody's working at the front desk, in the other video, we use the example of Brittany at the front desk. She calls her grandma in and she writes a policy. You cannot share in the commission unless Brittany is also licensed. They will give you usually scenario questions like that. And if the question does not clearly state whether or not that person is licensed, do not assume that they are, and assume that they are not, and that you cannot share commissions. Examples of permissible sharing is between licensed agents in the same agency, or with a licensed agent who referred the client, or with a licensed agency or insurer. Okay. Questions often test whether commission sharing is allowed in specific scenarios. Remember, both parties must be licensed. All right, so now we are going to talk about the Texas Life and Health Insurance Guarantee Association. They are there to protect Texas policyholders when an insurance company becomes insolvent and cannot pay claims or fulfill policy obligations. In the beginning of the first section, Texas laws and regulations, common to all lines, we talked about the word solvent. And solvent basically means having the funds to run as a business, being able to pay out claims, things like that. So if a company were to become insolvent, the Texas Life and Health Insurance Guarantee Association is there to help protect the public, right? Because all of these laws and statutes and regulations and things like that are there to protect the public, to protect the insured, so that they can still collect some of what they are due. The limits are up to $300,000 per life for life and health insurance benefits combined. This protects most consumers from total loss. What's covered is life insurance death benefits, health insurance claims, annuity values, unearned premiums, things like that. Okay. The Guarantee Association is funded by assessments on member insurers. Agents cannot use the existence of the Guarantee Association as a sales inducement. Okay, what does that mean? So, the Texas Life and Health Insurance Guarantee Association is there in case a company were to go bankrupt, right? And so that if somebody filed a claim, they were paying premiums into this life insurance policy, and then it's time to pay out to their family, and the insurance company is like, nope, sorry, we are going bankrupt. We are insolvent or can't pay this. The Texas Life and Health Insurance Guarantee Association can step in and pay up to a limit of $300,000. So we want to know that limit, the $300,000. But another question that they like to ask is if this is allowed. Okay. You can't use this as a way to get people to sign up. You can't say, don't worry, even if we go bankrupt, the Texas Life and Health Insurance Guarantee Association's got you covered. You'll get paid anyway. If I was going to buy a life insurance policy, or even my health insurance policy, and they're starting off their sales like that, I probably don't want to go to that company anyway. But we can't use it when we are selling things as kind of like this back thing, like we're guaranteed. This is to help protect the public in case the insurance company were to fail and go bankrupt, but we can't be out there promoting it. Okay. Life insurance marketing and advertising rules. There are some very strict rules and laws and regulations when it comes to how life insurance policies are marketed. Okay. The advertisements need to be truthful. That sounds like common sense, but they need to be truthful, complete, clear, and accurate. They may even put all of these in a question and throw in another one to throw you off. So all life insurance advertisements and illustrations must be truthful, complete, accurate, and, throw in something else in there. So just be, aware of these, kind of write these down. So it cannot be misleading. It needs to be complete in all material facts. Needs to be clear about guaranteed versus non-guaranteed benefits. There's life insurance policies that earn interest, etc. when you can pull loans from them, things like that. It can't be like, oh, it's absolutely going to be worth this dollar amount, unless it is some type of policy that does give you those definitive numbers. We need to be very clear on the benefits and accurate in depicting policy performance. Same kind of thing. Can't be like, this is going to be worth so much, X amount of money or this or that. If we can't guarantee it, if, the policy doesn't have something in place that does guarantee that. So advertisements cannot imply guaranteed returns unless the policy contractually guarantees those returns. There are certain ones, that no matter what happens in the market, it won't fall below 5%, things like that. So can't be making promises out there or advertising things that aren't absolutely truthful, complete, clear, accurate, etc. Required disclosures, okay? There are certain things that must be disclosed when we are marketing and advertising life insurance, okay? A policy summary must clearly explain the policy features, premiums, and benefits in plain language. Buyer's guides, educational documents explaining different types of life insurance and how to choose coverage. Both documents must be provided before or at the time of policy delivery. Okay, they can ask a question kind of about that timeline. When must a buyer's guide be given to a customer? It must be before or at the time of policy delivery. Same with the policy summary. Okay, they can't mail it out a week later. All right, if it's they can, okay. It should be there when you're first talking to the customer, right? It should be there before you're even discussing the policy, right? But it can be sent out, after that, but it absolutely cannot be sent out after policy delivery. Policy delivery meaning that they have signed up for you, bought a policy, and you are delivering that those policy documents to them. That buyer's guide and policy summary absolutely have to be with that delivery or before then. Okay. There are some mandatory life insurance policy provisions, and we will have some videos on those, or they may already be up, depending at when you're watching this. So we're going to go into um, the optional life insurance policy provisions in a lot more detail in the life insurance videos for that. Um, but because we're focusing on the statutes, laws, and regulations, we're going to go over what you may see in this portion of your exam, and that would be the mandatory life insurance policy provisions, okay? So free look period, 10 days. 10 days for most policies, 30 days for senior citizen policies, certain senior policies. So usually a policy that's requiring somebody of the age 65 or older. We're going to see that more in long-term care policies, certain medical policies, things like that too. But the policyholder can cancel for a full refund during this period. It's a free look period. It's your time to change your mind. And every policy must have at least a 10-day free look period. But there are certain policies we'll talk about where it has to be 30 days, okay? Grace period. Grace period is how long you have to pay your bill, okay? Free look period is I bought it, but oh shoot, I want to change my mind, after getting that policy delivery. And it is 10 days from policy delivery, the free look period. So if you bought it, and it takes a couple weeks for it to go through and all of that, and then the agent comes and brings the policy summary, buyer's guide, and your policy delivery, it's from that date, the date of delivery, that free look period begins, okay? But grace period is how long you have to pay. And it is 31 days to pay overdue premiums without a policy lapse. Coverage remains in force during the grace period. If death occurs, the insurer deducts the overdue premium from the death benefit. Okay, they do timeline questions on these. So let's say somebody's policy was due on April 1st, and they have not made a payment, and they passed away on April 18th, how much will the death benefit be? Let's say that they'll give you the other information. Let's say it was $100 a month, and the policy was $100,000. The person will get $99,900. Okay, so you got to take out that overdue premium. But if it was same scenario, April 1st, and they did not make a payment, and the person PEPs is away on May 10th, what are they going to get? 0. Okay. Reinstatement. We'll get to policy loans in a second because this kind of falls into place with this. If a policy lapsed because of non-payment, you can usually be reinstated within 3 years by paying back premiums plus interest and usually providing evidence of insurability. So yes, I'm still healthy. I'll back pay X amount, however long it was, up to 3 years, and they can get that policy reinstated. Okay, policy loans. Once cash value accumulates, the policyholder may borrow against it. Loan interest is usually 8% or less. Outstanding loans reduce the death benefit. They can give you a scenario like that as well. Let's say the policy death benefit is $100,000 and the person took out a $5,000 loan and didn't pay it back at the time of death. What is their beneficiary going to get? And it's $95,000. Okay, plus any interest, things like that. So, okay, prohibited policy provisions. So what we just spoke about in the last one were mandatory, right? Mandatory life insurance policy provisions. These have to be a part of every single life insurance policy. These absolutely cannot be. Okay, prohibited policy provisions. Texas law specifically prohibits certain policy provisions that would unfairly restrict policyholder rights or limit the insurer's responsibility. Okay, so what does that mean? No limitation on legal rights. Policies cannot contain provisions that restrict the policyholder's right to take legal action against the insurer. There are certain situations, contracts, things in life that can have, like arbitration agreements, promises not to sue, we must mediate, things like that. So life insurance policies cannot, or health insurance, but we're going to get into those in a little bit as well, cannot have things in place. They cannot contain provisions that restrict a policyholder's right to take legal action if they needed to. They cannot shorten statutes of limitations. Policies cannot reduce the time period in which a policyholder can file a lawsuit below what the state law allows. Okay, so if there is a 5-year statute of limitations, they cannot have create a life insurance policy that lowers it to 3. And no backdating beyond 6 months. Policies cannot be backdated more than 6 months to save on premiums, as this would misrepresent the insurer's age. Okay. But you can misrepresent the insurance age up to 6 months. So let's say somebody was going to buy a policy and their birthday is in October and they are going to turn 56 years old. Okay. And so, in September or before, we'll say their birthday's October 1st. They were 55. Maybe the insurance premiums jump a lot, from 55 to 56. There are certain ages where it does. As you get older too, when we start being in the 70s, each year increases the premium a lot. So let's say that they want to buy the policy in December. They can backdate the policy up to 6 months to get the younger age for to get that better rate, but it cannot be beyond 6 months. And they also have to pay for all of those six, however far they backdated. So in this situation, they would have to pay, September and October and December, but they would be getting that rate of 55 instead of 56. Okay. But it cannot be beyond 6 months. Group life insurance regulations. So group life insurance covers multiple individuals under a single master policy. Texas law specifies who can be covered, conversion rights, and policyholder protections. So eligibility and conversion. So eligible groups for group life and life insurance policies, we're usually going to see these in a workplace. So employers for employees, labor unions, trade associations, credit unions, other natural groups. Other group policies can be dependent coverage, spouses and children eligible. Coverage amounts are often limited. Same conversion rights apply. So this is, if somebody buys a joint policy and then some riders on their children. Again, we'll go more into these specific things in the life insurance videos and courses, but just focusing on the laws and regulations. So if you want to know more about, group life policies, what those look like, things like that, we're going to find those in the life insurance videos, but we're just focusing on those specific laws and regulations. And they have to have conversion privileges. So if somebody had a policy through their work or union, trade association, things like that, and they are dismissed from the job or leave the job on their own, they must have a conversion privilege where they have 31 days to convert it to an individual policy, no evidence of insurability required, and coverage continues during that conversion period while they're trying to determine, if they want that policy and things like that, because the rate is usually going to go up. But a lot of times people get life insurance and health insurance and things like that through their job without having to provide insurability. So in case they do have some health issues or things like that, or, they're a lot older than when the policy started. The nice thing about if you're leaving a group policy that you do have the right, you must have the right to convert it to an individual policy, and you have 31 days to do so. You do not need to provide evidence of insurability, but you will have to continue to pay for it, and it's usually a bit higher because you're not part of that, big eligible group. So exam tip, the 31-day conversion period is heavily tested. If a covered person leaves the group, how long do they have to convert to an individual policy without a medical exam? 31 days. Credit life insurance. Credit life insurance pays off a borrower's outstanding debt if the borrower dies before the loan is repaid. It protects lenders and borrowers' families. A lot of times we see these for mortgage protection, things like that. Coverage limit. The death benefit cannot exceed the loan amount. As the loan is repaid, the coverage decreases. The lender is always the beneficiary, receiving only the amount needed to pay off the debt. Okay, so let's say somebody has a policy and it's to cover their mortgage. Let's pretend it was $100,000 mortgage. They've been paying into it and paying into it and paying into it, but those premiums have only paid for 50,000 of it, and the person passes away. It doesn't matter. That policy needs to go in and pay the remainder of that loan, which is in this situation still $50,000. But it decreases. These policies decrease over time. Again, go into these more specific in the life insurance videos. So the payout, the death benefit, cannot exceed the loan amount. It's only going to pay off the remainder of the debt, right? They're not going to get to pocket this other the other $50,000. But they're set up that way so that the dollar amount kind of makes sense. And the lender is always the beneficiary. Okay, so that's another test question they like to ask is, who is the beneficiary in a credit life insurance policy? It is always the lender. And policies typically match the loan term and may not extend beyond the debt repayment period. So usually, it's kind of matched up to, a 30-year mortgage or things like that. All right, policy replacement. There are some specific laws and rules and regulations for policy replacement. Okay, this is usually these questions seem to stand out. People say that they see these questions a lot, but I think it's because it's one of those sections that, um, feels confusing. And so sometimes we seem to remember the things that are like a little bit more challenging and whatnot. But if you break it down, it's just kind of simple. They want to make sure that when we're replacing somebody's policy, so if somebody has a policy with a company and we're going to have them cancel that and come buy a policy with us, there needs to be some strict rules into that, right? We need to make sure we are not putting them in a worse situation. So, replacement occurs when a new life insurance or annuity policy is purchased and an existing policy is lapsed, forfeited, surrendered, or terminated. Texas has strict rules to prevent inappropriate replacement that can harm a consumer. So it is the agent's duty. They must provide a replacement notice that the applicant and the agent both sign, disclosing that the replacement is occurring. It needs to be signed by the agent and the applicant, that they understand what is going on, that you are replacing their old policy for this new one. They must notify the existing insurer within 3 business days that a replacement application has been taken. So they need to let the other insurance company know as well within 3 business days. And the existing insurer's right. The existing insurance company has the right to conserve the policy by contacting the policyholder and may provide information about the existing coverage. They may, convince them to stay. They may be able to, add some benefits, things like that. All replacement communications and forms must be maintained for 5 years after the replacement. So these are some files and documents that you got to have on hand as an agent, as the insurance company, if you do a replacement. The 3-day notification requirement is frequently tested. Don't confuse this with the 30-day requirement for other notifications. It is 3 days. They must notify the replacing insurance, the company that they are replacing. Okay, 3 business days. They must provide them with a replacement notice. Who must sign it? The applicant and the agent. And the existing insurance company has the right to, try to keep them. And you need to maintain records on files for at least 5 years. All right, non-forfeiture law, protecting cash value. Non-forfeitures are kind of a challenging section on life insurance policies as well. Again, you're going to want to go to the information in your courses or videos on that. Again, depending on when you are watching this video. Those videos may already be up on our channel, may or may not, but they're coming if they are not. But again, we're just trying to focus on the laws and regulations part of this and not teaching these concepts here so that we can stay on focus of the laws and regulations. So non-forfeiture law is to protect cash value. It ensures that the policyholder receives the value that they've built up if a cash value policy lapses or is surrendered. So if you've been paying into a policy and you stop paying into it and it's going to lapse, or you decide to cancel it, or they decide to cancel it, the insurance company, and it has built a cash value, you have rights to protect that. And you can get those non-forfeiture options in multiple different ways. That's the confusing part that you'll learn more in those specific sections. But what you need to know for this part is that they must offer non-forfeiture options, and they must offer a cash surrender value. Get your cash. This is what it's simple as it is. Cash surrender value. This is the cash value of your policy. You can get that. We'll send you a check. Or they can get a reduced paid up insurance. So however much money is already into the policy, they can get a reduced one. Let's say they had a $50,000 policy, but the cash value that they had will buy a $10,000 policy. They must have that option. Or an extended term policy, which is, let's say instead of getting, a paid up $10,000 policy, they could say you get a term policy that is good for 5 years and 12 days. So they can either get an extended term insurance that'll run out once that cash value runs out, or a cash value that will buy a reduced paid up insurance. They don't have to pay on it anymore, but all they get is how much that cash value can buy, or they can just get the cash surrender and get a check in the mail. It applies to whole life, universal life, and other cash value policies. Term insurance has no cash value, so non-forfeiture provisions don't apply. These provisions prevent insurers from retaining all premiums when a policy lapses. The policy has earned a value and it is entitled to that customer in some form. Okay. This is going into what those non-forfeiture options are a bit more. So again, when a cash value policy lapses, Texas law states that you have to have at least these options available so that that customer does not lose the cash value that they accumulated. Again, cash surrender for that check. Reduced paid up, it's going to buy just whatever dollar amount. Let's say that this ends up buying, like I said, a $10,000 policy instead of the $50,000 one that they had. Or it can be an extended term policy that lasts for however much time that dollar amount would buy. We used like the example of 5 years and 12 days. So these options ensure that policyholders retain the value of their investment even if they stop paying premiums and the policy cancels. They have a right to that cash value that is theirs. All right. Section 3 is our laws and regulations that are pertinent to accident and health insurance laws. This section covers 7 exam questions on Texas law. So let's hop into those. So there are required health provisions, just like we talked about the required life insurance provisions, there are required health insurance provisions. Again, there are some optional ones. You'll learn about those in those sections, but for the state laws and regulations, these are the ones that are required, mandatory. Okay. Grace period. Remember, grace period is how long we have to pay our bill. So it is 31 days for annual premium policies and 10 days for policies, any other policies. Okay. So most health insurance policies are, monthly. Some people can pay it annually. We usually see annually more often in, the life insurance world or home insurance, things like that. But if it is an annual policy that they have to pay it annually, they must have a 31-day grace period. If it is monthly or weekly or quarterly or every 6 months, then it is 10 days. They have 10-day grace period for those policies. Okay. Some other required health policy provisions. They must have chemical dependency coverage. Policies must provide coverage for treatment of chemical dependency, including alcohol and drug addiction. And they also have a free look period, like with life insurance. So it is 10 days. Usually it is 10 days for free look period, but it is 30 days for Medicare supplement and long-term care policies. And just like with life insurance, that was with some senior policies and Medicare and long-term care. are generally, senior policies, but you can buy a long-term care policy at any age. So it is 30 days free look period. And remember, free look period is how long you have to return it for your full money back. Okay. So grace period is how long to pay your bill. Free look period is how long to change your mind. Okay. And they could even ask you a question of saying, health policies must include all of these provisions except, and add something else. But these are the ones that are required. And newborn coverage. Newborns must be covered from birth. Notification and additional premium payment typically required within 31 days. So they could ask, how long do you have to add a newborn onto a policy? 31 days, but they are covered immediately. Okay. So, childbirth sometimes happens unexpectedly. Usually it happens unexpectedly, right? You don't know exactly when your water is going to break or when you're going to go into labor. And the last thing you're thinking about in those moments is, oh, I better call and add this baby before they are born. No, they are covered immediately at birth, and you have 31 days to add them to your policy. So required health provisions, grace period, 31 days for annual, 10 days for any other premium payments. So if it's monthly, weekly, semi-annually, things like that. 10 days to change your mind, 10-day free look period, unless we are talking about Medicare or long-term care, in which it jumps to 30 days. And all policies must cover newborns immediately and must offer coverage for chemical dependency, alcohol and drug addiction. These are required health provisions. Medicare supplement insurance. So laws and regulations pertinent to those. Standardization and consumer protection. Medicare supplement, also known as Medigap, policies must follow federally standardized plans, plans A through N. Okay, this allows consumers to compare policies easily. So when you're learning about Medicare policies, you know that there's, coverages A, B, C, D, all the way through N. They have to be the same. They have to be standardized across all companies. Okay, so what is covered in B must be covered in Medicare, Medigap policy Plan B. Must be the same as L in L. It must be the same. It needs to be standardized so that consumers can compare the policies easily. It's already rather confusing. It needs to be clear and simple across the board. So they must be standardized across the board, Plan A through Plan N, Medicare supplement policies, Medigap. And it has to have 30 days for free look, which we knew that on the last one. That's a required provision for Medicare and Medicare supplement policies and long-term care policies. 30 days to change your mind. And guaranteed issue rights. Insurance must issue coverage without medical underwriting during certain periods. There are some certain times, like open enrollment, things like that, where they must issue coverage without medical underwriting. So, open enrollment period. It is the first 6 months after enrolling in Medicare Part B. So at age 65 or older. Some people don't sign up right at 65. They may still be working and having a policy through their employer, etc. But the first 6 months after enrolling in Medicare Part B is the open enrollment period. So during open enrollment, they cannot be denied coverage. They cannot be charged higher premiums due to health, and pre-existing conditions are covered immediately. Okay, so these are some things to know when it comes to Medicare supplement insurance. Higher premiums, pre-existing conditions need to be covered. We're not going to be doing medical exams on them, medical underwriting during open enrollment. And they have 30 days to change their mind, and the policies have to be standardized across the board. AIDS testing requirements. Insurers must obtain written informed consent before conducting an HIV/AIDS test as part of their underwriting. Verbal consent is insufficient. So when somebody's signing up for a life insurance policy, health insurance policy, in this instance, we're in the health section. Sometimes they may need to go give blood work. A lot of times they'll send like a nurse to your home to take, blood and urine and ask a question, a questionnaire. If the company is going to be testing for AIDS or HIV, they must obtain written consent from the consumer. The test results are strictly confidential and protected by law. Unauthorized disclosure can result in severe penalties. And if the test is positive, the applicant must be notified and provided with information about counseling resources. And somebody cannot be denied solely on the results from their AIDS testing requirements. So if they were going to deny their coverage, it has to be in conjunction with other things. You cannot deny coverage solely based on an AIDS or HIV test result. These protections balance insurers' needs for underwriting information with individual policy rights and protection from discrimination. Okay, long-term care insurance. These are the regulations pertinent to LTC insurance. The coverage purposes provides benefits for chronic illness, disability, or custodial care needs, including nursing home care and in-home services. Again, we're going to see that 30-day free look period. Remember, it's generally 10 days. However, when we are talking about long-term care or Medicare policies, it is 30 days. And that is how long we have to change our mind for a full refund of what we've paid. Benefit triggers typically require the inability to perform 2 of 6. Okay, so benefit triggers. These are the things that would trigger a long-term care policy to go into place. And it typically requires the inability to perform 2 of the 6 activities of daily living, ADLs, which those will be gone over more in depth when you are learning about the long-term care policies. But those are bathing or showering, dressing, toileting, eating, transferring, the ability to get in and out of your own bed into a chair or things like that. Or cognitive impairment diagnosis like Alzheimer's and dementia. Required features. It must offer inflation protection and include a clear outline of coverage, explaining benefits, limitations, and exclusions. So if the policy was bought in several years ago, it must offer inflation protection so that as the cost of living goes up, the policy will still provide for the coverage that it would have when you signed up for the policy. So must have a 30-day free look period. It must have benefits for chronic illness, disability, and custodial care, including nursing home and in-home services. It must be able to be triggered after 2 of activity daily of livings are unable to be performed or a cognitive impairment diagnosis. And it must offer inflation protection and, of course, a clear outline of coverages explaining the benefits, limitations, and or exclusions. Okay, small group health insurance. Here are the laws and regulations that are required for small group health insurance. In Texas, a small group is defined as having 2 to 50 eligible employees. Okay, question could be as simple as what qualifies a group to get small group health insurance, and they must be between 2 and 50 employees. A solo entrepreneur cannot get it if it's just one person at the company themselves. But if it has 2 to 50 people, they do qualify for a small group health insurance. Once they get to 51, they would need to be getting just regular group health insurance policies. They need to be guaranteed issue. Insurers must offer coverage to any small group that applies, regardless of health status or claim history, and guaranteed renewability. Policies must be renewable at the group's option. Insurers cannot cancel coverage due to claims or health status changes. So, let's say in this last year there was, a lot of claims, or somebody was diagnosed with a terminal illness, they cannot decline renewing the policy for them as a group. The rates cannot be based on health status, claim history, medical conditions, or genetic information. It cannot be a factor used in pricing. They can only come up with rates based on age, geographic area, group size, or tobacco use, or all of those, or some of those, or whatnot. But those are the only factors that can be put into place when they are coming up with the rating for small group health insurance. It cannot be based on genetic information, medical history, things like that. This is why a lot of people like to have the benefits of having group health insurance. Okay, Affordable Care Act, the ACA. These are mandated benefits and consumer protections that are in place. And here are some of those, essential benefits, things like that. So there are 10 essential health benefits that must be provided in all health insurance policies due to the Affordable Care Act. I would go over these, write these down. They're going to ask questions saying, all of the following are part of the essential benefits of the Affordable Care Act, except, and it's going to be something not on these lists. So I would familiarize yourself with these. It does need to have ambulatory patient services, outpatient care with hospital admission or without hospital admission. Must also offer emergency room and urgent care coverage. Must also have hospitalization coverage and surgery, maternity and newborn care, mental health and substance abuse coverage, prescription drugs, rehabilitation services like physical and occupational therapy, laboratory services, diagnostic and preventative lab tests, blood tests, x-rays, things like that. Must also offer preventative and wellness services, so screenings, immunizations, counseling, and pediatric services. Dental and vision care must be offered for children, okay? Must be covered. Individual and small group plans must cover all 10 care categories and no lifetime limits allowed, okay? They can't say, we're going to cover you up to $500,000. Once you reach that, we're no longer covering you. No lifetime limits, and it must provide all 10 of these categories. Again, write these down, make some flashcards, familiarize yourself with these. The Affordable Care Act also removed pre-existing condition exclusions, right? So it's offering pre-existing condition protections. There cannot be pre-existing exclusions. Insurers cannot deny coverage or charge higher premiums based on a pre-existing medical condition in individual or group markets. They cannot have lifetime limits. They cannot impose a lifetime dollar amount on essential health benefits. Annual limits are also prohibited. And dependent care coverage. Young adults can remain on their parents' plan until the age of 26. Even if they're married or financially dependent, they can stay on their policy until the age of 26. Also, dependents can stay on longer than the age of 26 if they have an impairment or limitation that requires them to still be in their parents' care, a disability and such. HMOs, health maintenance organizations. There are some requirements and laws and regulations around those. HMOs provide comprehensive health services through a network of contracted providers. Members typically must use network providers except in emergencies. Okay, so if you have an HMO policy, you have to go to a doctor in network. Unless it is an emergency, you're allowed to seek care anywhere. Evidence of coverage. HMOs must provide members with a clear document outlining all covered services, limitations, and exclusions. And they must explain their enrollment rights, must clearly explain enrolled procedures, effective dates, and cancellation rights. They are allowed to require that members select a PCP, primary care physician, who sees their care, who coordinates their care. If they want to go see a specialist, it's going to usually require a primary care physician referral. These are going to be gone over again in a lot more detail once you're learning about HMOs and PPOs, etc. But the big thing here is that emergency care must be covered regardless of network status. Out of network does not need to be covered other than in the event instance of an emergency. All right. So those are our main focuses on laws and regulations pertinent to life and health for the state of Texas. Some of these key timelines on this reference sheet are from video 1, where we went over Texas laws and regulations pertinent to all lines. Again, if you've not seen that, go back and watch that one first, because that's kind of the foundation of all of this. It's also the larger section of the regulations for your exam. So let's go over these, do a nice recap. How long is the licensing renewal good for in the state of Texas? 2 years, right? And what do you have to do in those 2 years? 24 hours of continuing education. 2 hours must be in ethics. You have to notify the TDI of any address changes or name changes within 30 days. Same with any disciplinary things like felony convictions, 30 days. How long you need to keep your files on place for your continuing education, keep those records, is 4 years. Replacement notification to an existing insurer for life insurance policies, right? 3 business days. Temporary license are good for up to 180 days. Remember, non-renewable. Insurer appointing filing within 15 days. And insurer termination reporting within 30 days. Life insurance free look period, 10 days minimum. However, we will see in certain policies like Medicare supplement, long-term care, things like that, getting 30 days. Grace period for life and health policies, as long as they are paid annually, we get 31 days. You also get 31 days for group life conversion period. Remember how long you have to go convert your policy into an individual policy once leaving a group. Usually 3 years reinstatement for a lapsed life insurance policy, but you have to pay any backdated premiums and usually fill out a certificate of good health. You can backdate a policy up to a maximum of 6 months. Remember, maximum penalty for unfair trade practices, $25,000 per violation. The Guarantee Association coverage limit, $300,000. And remember, you cannot advertise the Life and Health Insurance Guarantee Association as, part of an inducement to get a sale. Small employer group size qualifications, 2 to 50 employees. And Medicare supplement is the 6 months after Part B enrollment, which is usually when somebody turns 65. Independent care coverage is up until the age of 26, longer if you are remaining independent care for certain disabilities, etc. All right, let's do a quiz recap. We have more of these in your workbooks and study guides that you can get online at our website at fastpassuniversity.co. That's .co. We are also um, doing more practice quizzes and exams and things like that inside our school community, which is school.com, SKOOL.com/FastPass University. So definitely don't forget to check us out there for more resources and all of those. All right, there are 10 questions. 5 of them are on here and 5's on the next one. We're going to go through them, write them down, and then we'll go over to the answer key afterwards. So question number 1. The Texas Commissioner of Insurance can issue which of the following? Policy approvals, cease and desist orders, CE exemptions, or coverage denials. Questions 2. The free look period for most life insurance policy in Texas is 5 days, 10 days, 20 days, or 30 days. Question number 3. CE requirements for Texas life and health agents are 12 hours every year, 24 hours every 2 years, including 2 ethics hours, 30 hours every 3 years, or 36 hours every 2 years. Number 4. An insurer must notify an existing company within how many business days of a replacement? 3, 5, 10, or 15. Number 5, the Texas Life and Health Guarantee Association covers up to $100,000 per policy, $200,000 total, $300,000 per life, or unlimited. And question number 6. A Medicare supplement policy has a minimum free look period of how long? 10 days, 20 days, 30 days, or 60 days. AIDS testing requires, this is question number 7, no disclosure, written consent and confidentiality, verbal consent only, or state lab approval. Question number 8, the conversion period from group life to individual coverage is 15 days, 31 days, 45 days, or 60 days. Question number 9, who regulates the approval of rates and forms for the insurance, for life insurance in Texas? Federal government, Commissioner of Insurance, Department of Commerce, or insurance companies? And question number 10, the penalty for unfair trade practices can be $1,000, $10,000, $25,000, or $50,000. And the answer key, number 1, is cease and desist orders. Question number 2 was 10 days. Question number 3, 24 hours every 2 years, including 2 ethic hours. Question number 4, the answer was A, 3 business days. And question number 5, the answer is C, $300,000 per life. Question number 6, the answer is C, 30 days. Number 7 is B, written consent and confidentiality. Question number 8, 31 days. Question number 9, the Commissioner of Insurance. And question number 10 was C, up to $25,000 per violation. Master the numbers. Here's some study strategies for your exam success. Just master the numbers. Focus on the memorization of all time frames and dollar amounts and numerical requirements. These are frequently tested. That's what they're going to do. Very similar to the questions we just did. Understand key concepts. Now, we do like to say don't just memorize things. Understand why each regulation exists, but it is a lot of memorizing of numbers. But understanding why long-term care and Medicare policies have a 30-day free look period instead of 10, right? It's because we're usually dealing with older individuals, things like that. And practice. Get familiar with practice exams and identify weak areas. but don't do them to the point where you're trying to just memorize questions, because they are going to look different on the state exam. Practice so that you can find your areas that you're struggling with, and then go back and learn those topics. Common exam traps to avoid. Confusing time frames, okay? So understand, which one is the 3 days for, the 10 days, 15, 30, 31. Know where they apply, okay? Mixing up the free look periods versus, the 10 days for most policies, but 30 days, for Medicare supplement and long-term care. Penalty amount errors, small group definition, just know what it is that you're memorizing the number for. And stay focused. Think like a regulator. Remember, these laws exist to protect consumers and ensure fairness, fair policies, fair practices, and believe in yourself. You've got the knowledge now. Demonstrate it with confidence. And if you need any further support, we know we have tutoring options. We also have the school community and the different resources on our website. But you got this. All right. See you soon.